All right. So thank you guys for joining. I'm gonna do this class, or I've been wanting to do something like this, or like a lecture in regards to showing you guys my different types of entry functions and how I get into trades in the market. I don't just execute off of primarily order blocks. I'll utilize the order blocks from the forever model, or I will do inverse fair value gaps or breaker blocks. So I'm gonna have each kind of like, I'm gonna do a schematic on each chart, or on each like little divider here. So let's kind of make this layout and get it to copy onto both sides. And we're going to put this into depiction of us being in a market maker buy model. Let's do that. So let's copy this, clone it, drag over like that, clone this, drag it over like that. All right, so all of these, let's say they're going to be framed and made from, let's say, a fair value gap or a higher time frame key level. So price tags our higher time frame internal range liquidity pool on all three of our setups like this. Now, what do we do when we see price tag? Let's say we're on a 5-minute chart here across on, let's say, the NASDAQ. And we are watching price tag a 1-hour bullish fair value gap. And we need to see for the step 1 of the tag of a key level, fair value gap. Step 2, obviously, on our higher time frame is SMT divergence. So let's say that there's an SMT created at the tag of this fair value gap like this. So let's say that price has created an SMT inside of that hourly internal range liquidity pool. We have step 1, we have step 2 checked off on the list. So then all we do from this point on is we're just basically waiting for a reaction of that key level. Now, the reaction of this key level can occur in 3 different forms, and 3 different forms of you being able to capitalize on the move. So you guys already would know, let's say the first depiction here, price creates a down close candle that runs a short-term low. Let's say this is the down close candle here that runs a specific short-term low. And we clear out like this. This is our short-term low. I'm just making the schematic here. We sweep out from that down close candle. And the next up close candle is the reaction higher like this, closing it above, confirming what? It confirms a bullish order block just like that. So that would be obviously the forever model from how we typically get into our trades. And then we would long the retag of that order block like this, put your stop loss at the low, and then target simple 1 to 2 risk to reward just like that. Now, that would be the first way of getting in, or at least how you guys are familiar with executing on these trades. Now, let's say price creates a swing or a big manipulation leg at, let's say, like the key time, or we're watching indices, 9:30 comes in, sweeps lower, creates the SMT, has a manipulation leg that also has an overlaying fair value gap. So let's say that this right here is a fair value gap or a bearish fair value gap, just like this inside of this swing. So 5-minute chart, we have a down close candle, down close candle, down close candle that tags the hourly gap here, leaving behind a M5 bearish FVG. So at this point in time, there's 2 things that you can do. You can either, 1, wait for price to completely flip and close above. Let's say there's the down close candle here. Actually, I need to make this like a little bit thinner because the body of this thing will be fucked up. let's say this, make this all black. Boom. Boom. And boom. I can't draw the wicks because I can't go in between this thing, whatever. But you guys are kind of getting my drift and my vibe. Let's say this is the swing right here, and this is our fair value gap. Just like that. If price closes off this inverse or inverses this fair value gap, this would be my second way of capitalizing on a move without needing to get in on the order block, because I'm pretty much just utilizing my higher time frame to frame what I'm going to do for that day. So if price wants to blast higher, inverse this M5 bearish gap that is within the manipulation leg of tagging our higher time frame key level, trade back into it, I will long here as a starter position. AKA, I will get in at 0.5% to begin with my position. And then price explodes higher. But let's say this down close candle here at the high end of the move or whatever it is, say this down close candle was the one that swept out a short-term low and our only candle that was utilized as an order block. Like this. This candle here. So if we close above it, this would be the high probability bullish order block, right? Just like that. But sometimes, you guys have already witnessed this, price doesn't always retrace back.
The market is closed.
Top Step just needs, that bitch from Top Step needs to shut up. The market doesn't always provide that entry. And unfortunately, in certain times, you should be able to jump into a position without needing that specific entry function, which is why I rely on certain stipulations like this. Because if price tags me on the inverse fair value gap here for that second possible execution, I don't need to really worry about, like, I'll put limits on for the order block, but if the order block doesn't get tagged, I don't care because I already still have risk onto the table here, which is fine. I just want to make sure that I'm still a part of the move when I know where the manipulation is occurring in the marketplace. If we have a protected low set in here, when SMT is created inside of that hourly gap and the M5 displaces higher, violating a bearish PD, right? We close above that M5 gap. Boom. I'm going to go in first, and then let's say price comes back down again and retags the order block like this. I'll add in another piece of the position and I'll be in full size. Does that make sense to you guys? So I can get in here at the inverse fair value gap. I can get in here at the order block and boom, I'm good. So like the inverse fair value gap will be like the first starter position of anything premature before the order block. That is only if we create a gap in the manipulation leg down into the higher time frame key level. That is what I want. So do I wait to see the reaction at the order block? Like at this order block you're saying here? No, I would literally, I would be in at the inverse fair value gap and then I would add again at the order block. Like that. I wouldn't wait to see the reaction at all. I would literally just add in again. So I would be in at the inverse fair value gap, and then I would be in again full size on the position at the order block, like this. Now, the next way of execution would be, let's say price absolutely expands aggressive off of that hourly gap here. And let's say, oh my God, these stupid phone calls. I need to put my phone on DND. How do I put, where's DND? All right, whatever. Let's say this right here, this downswing, this is one manipulation impulse lower inside of that hourly gap. But let's say that the reaction is super, super aggressive and we explode higher like this, and we close above the entire manipulation leg down, what does that leave behind? That leaves behind a bullish breaker block. Now, this would be where I would be executing off of the breaker first and then leaving a limit on, let's say, an order block that is below. Because let's say that this is the highest up close candle in the manipulation leg. If price trades down into this breaker, I'm going to add, and I'm going to buy right there. Just like this. Buy like that. Stop loss at the low where the SMT is created. Target a 1 to 2. And let's say price comes down a little lower from tagging that breaker, and it wants to come into, let's say, like there's a bullish order block right here. I don't want price to run without me or leaving me in the dust if I'm just being greedy, getting a lower entry at the order block. Just in case, I'll have a limit at that order block as well, like this, with the same stop loss and a better TP like this. Just in case price wants to come down a little bit, dig deeper into the breaker, tag the OB, and then go higher like this. But if we get such a crazy impulse, what majority of the things that's going to happen is price is just going to tag the breaker or a fair value gap aligned with the breaker, and then I'll get in like this. So I'm pretty much just making sure that the framework and our intraday bias is all derived from what is going on here and the reaction inside of the higher time frame key level, that fair value gap. And vice versa, I'm going to be doing the same thing if I'm framing the shorts. So this is exactly how I'm looking for all of my trades intraday for when I'm looking to catch the expansion of the daily candle. I'm always doing like, what's it called? I'm not doing the body. I'm doing the wick. It also depends on how big the size of the wick is. Majority of the time, it's small wicks. Like if it's a huge wick, I'm not gonna get in on the wick. I would prefer to get in on the body. But this is exactly what I'm doing. Like I care about what is going on here. I don't care about the entry function as much. I care about the reaction from the higher time frame key level. If the higher time frame key level is framing a reversal, because I want to know, like, this is, if we're framing a market maker buy model from a retracement, like we're doing an hourly internal to external range move, this being the hourly external high, we're looking to see if the smart money reversal is ready. This is the smart money reversal. The breaker, the inverse fair value gap, or the order block will be the low risk buy. And then price will be ready to expand to then take out the external high. So once I know that the smart money reversal is confirmed from that higher time frame key level, this is a fractal concept. This happens from hourly to M5, 4 hour to M15, daily to 1 hour, 4 hour, like weekly to 4 hour, monthly to daily, 15 to M1, all that sort of shit. So I just need to know that price is ready to flip once we get a bullish reaction from that fair value gap or that external range low if we're doing an external to internal range liquidity pool run, that sort of stuff. So I need to see a clean reaction with displacement from that key level. Once we get that, I have 3 different ways to get into the trade. Either the order block from the forever model or the inverse fair value gap or the breaker. The breaker being if the impulse is so strong from the SMT being created and tagging the gap, and then the IFVG is if it's like a nice reaction with displacement, but we just shyly miss closing above the order block, but we inverse a fair value gap. That's a first sign of a reversal for price ready to expand to the opposing direction. And then this here is just price giving me the change and save delivery for us to then go higher, labeling the protected lower high. Did I explain this properly to you guys? We care only about if the key level is valid or not. I don't care about the entry functions as much. I care about the reaction from the key level. That is the most important thing. You could be more lackadaisical in regards to the entry. All you really need to know is if price is ready to reverse from that key level. That's the biggest thing. If price is ready to reverse, then you're good to go. And you just make sure that your stop loss is placed in a protected lower or high. Bro, this is literally bias. This is literally how to frame bias. Like this is it. This is it. I just explained to you how to frame a daily bias. Ugh. But what I will do now, I'm going to show you guys like little chart examples from a couple trades that I took in the past. Now, you don't need to you could screenshot this if you would like, but it's going to be on YouTube regardless, so don't worry. So don't you worry. Let's look at some examples. Let's go to the trade that I took on my birthday. July 2nd. July 2nd. Right here. All right. So, you want to know about bias? Pay attention. Pay attention. So, July 2nd's trading day. This was an absolutely beautiful, beautiful, beautiful day. Price is doing what on this daily chart? What are we doing here? We are trading away from a daily bullish fair value gap. What is happening inside of this daily gap? We are creating an SMT at the daily gap tag with all three of the correlated assets. We have the NASDAQ making a lower low inside of that gap, while the S&P 500 is making a higher low. And the Dow, again, higher low, just like this. Much stronger than NQ. This is a daily internal to external range draw on liquidity. Price moving to this. We are framing a narrative based off of our daily chart. Now, at this point in time, doesn't matter about SMT at the highs. Literally does not matter. We are in a bullish trend. Ignore that. You are literally going to anticipate indices to continue and play catch up to the opposing pairs. Now, listen and pay attention. So, at this day, let's go down to 4-hour charts. What do you mean you can't see the chart? You're viewing the wrong screen. Can everybody else see the chart? What's up, Dreams? How you doing, brother? All right, back to the lesson. All right, so we had a daily narrative set into place, internal to external range move, this being the daily external high, NQ playing catch up to the opposing pairs. Now, what did we do at the 6 o'clock time? We cleared a previous daily low, sweeping inside of that daily bullish fair value gap. And at this 4-hour, 6 a.m. candle, what is happening? We have 8:30 if there's high impact news. We have 9:30 equities open. So this 4-hour, 6 a.m. candle is very important. So what is going on at this time? Let's go to the 15-minute chart. At the sweep of that external range liquidity pool inside of a daily gap. Is this happening for a lot of people where you guys can't see both? What if I turn off my camera? Oh, shit. Hold on. Or I'm resharing. How about now? Good now? Everybody good? Discord is honestly like a piece of shit. I'm not going to lie. There's so many bugs with this platform. I don't understand why it does these stupid bugs. Bro, I look baked every day. So, and I was also frying in the sun. So that might be why. All right. 15-minute chart is what we're looking at after running that previous daily low. Now, at this sweep here and inside of that gap, we're just waiting for what? I believe there was a high impact news event at 8:30. So pay attention to the key times as well. The key time, 8:30, comes in and does what? Manipulates lower, creating the SMT at the previous daily low inside of that daily bullish fair value gap. Now, at this point in time, all we do is wait. Now, we created a bearish fair value gap here on the 15-minute, like that. And we have a down close candle here that cleared liquidity and created higher time frame SMT. So, at this point in time, if price inverses this 15-minute gap here, that could be your first area of execution. Like you could execute here with your stop loss at the SMT low at the 0.5% risk, or you can execute at the 15-minute bullish order block if we confirm it and we close above. So the next 15-minute candle, we close above the down close candle here, and we also inverse that M15 bearish fair value gap. So you don't need to focus on the inverse fair value gap. All you need to do is focus on the order block. So your execution would just simply be like this. But let's say if price didn't close above the order block, I will be buying once I see price inverse that gap and just have the same stop loss at the SMT setted low. That's it. So knowing that price violates a bearish PDRA at this time, running the previous daily low, I'm completely content as long as my stop loss is covering that SMT set in here. I don't care. The stop loss placement is very, very, very important. The manipulation should create an SMT. And it's more important and it's more powerful when it's created at a key time, aka if it's high impact news at 8:30 or if it's 9:30 equities open, if there's no 8:30 news. The times of the SMT is very important. Now, since we had a manipulation at the 8:30 time inside of that previous daily low and the daily bullish fair value gap, we can anticipate this to be the protected low or potentially low of the day here for then 9:30 to run higher. Because if we already created a manipulation, we wouldn't need equities open to manipulate again. So the next 15-minute candle tags that 15-minute bullish order block, and then price at 9:30 expands. So this would be your TP just like this at 1 to 2. But when we were watching this live, and I'm watching, let's say you missed the 15-minute order block. The next area for you to potentially watch would be what for another capitalization of the move? A breaker block, right? A breaker block would be a potential for you to get in. Now, if you wait for after 9:30 for always getting into trades, your breaker would be confirmed right here. Once we closed above this up close candle, the highest up close in a manipulation leg move, your entry would be here with your stop loss at the low of the short-term low that got ran from the manipulation leg, just like this. So if you miss the order block, then you could just simply buy the breaker here with your stop loss here and looking for another 1 to 2 risk to reward, just like this, relying at these relative equal highs above. So you could have gotten in on two different ways in this means of execution. Super, super high probability. You would be tagged in here, and then you would be looking to take the trade higher to those relative equal highs. Just like that. This was probably one of the cleanest trading days in July. Have it being in the opening of the month. This was super, super nice. And note how the timing of when price is happening and when we're creating the manipulations. 8:30 manipulates, 9:30 distributes. And it's a V-shaped recovery, either creating the M15 bullish order block from the entry down here or the 5-minute breaker after 9:30 open that is confirmed for a continuation. Both of these trades were caught live. The framework behind the 15-minute execution based off of a 4-hour was more probable to me because the structure was much cleaner. It was much cleaner from a 15-minute perspective than me looking at the 5-minute perspective. Because if I looked at the 5-minute, there was I would have missed the order block down here. Let's say if we went to the hourly, I would have missed the order block down here. And then my only way of execution would have been at the breaker up here. But that's fine because you still would have been able to catch it. So let's say if we went from a daily to a 1-hour to an M5, all you would be doing is waiting for that breaker execution up here. So you still would have been able to capture the trade if you're doing daily 1-hour M5. That would have been it. If you can't hear me, that is something you need to deal with Discord. Does everybody else can hear me? Discord is so annoying. Bruh. What is going on? But super, super simplistic way. If you miss one entry, you could always find a way to get in again. What? I never take trades at 8:30. I wait for after 8:30. 8:30 needs to either I only focus on 8:30 if there's high impact news. I have a video on that. Akash, this is a video on entry functions. My God. Okay, let's go over another trade. Let's go over trade from June 27th. June 27th, which was right here. Boom, boom, boom. This was, where was this? Oh, here. Here she is. Here she is. Okay. Now, this trade was framed from, what is this time frame? This was a 1-hour to an M5. So, came into the day. What is happening at this candle? Let's go down to this 9 o'clock. In this 9 o'clock hourly candle, what are we doing? We have equities open. There was no 8:30 news at this day, I believe. So we're relying on the 9:30 open to give us a direction as to what we're doing for that day. if I compare the S&P 500, the NASDAQ, and the Dow Jones together, and you guys are also thinking SMT at the highs, does not matter because we are trading in a higher time frame bullish trend. So I am still trading in alignment with the trend. So the NASDAQ has a bigger dig deeper lower like this. But again, wicks just do the damage. Bodies always tell the story. Bodies are closing within bullish PD arrays, aka these bullish fair value gaps. So this fair value gap here, this fair value gap here, and the Dow Jones being the stronger pair overall. So at this time, we go to the 5-minute chart and we see what is happening at this key time. Now, what happens exactly at 9:30? 9:30 does what? Manipulates and creates SMT. Because there's no high impact news at that 8:30 time, so I'm reliant on 9:30 to tell me what is price going to do for the New York AM session. So I have an idea as to where price could potentially set the low in, but what can I be doing here next? Marking off potential ways of me being able to capitalize and frame a trade. So I have no down close candle here on this 9:30 move for me to frame an order block because this is an up close candle. But if I look to my left, there is a 5-minute bearish fair value gap resting right here. But above that, there's also a down close candle resting right here that could be utilized as an order block. Just like that. So if I skip a 5-minute candle, let's say this 5-minute candle did not close above that down close candle that ran that short-term low. I would still be doing the same exact thing and executing off of the inverse fair value gap. That's exactly what I would be doing. So if I got in at the inverse fair value gap, my entry would be here, and my stop would be relative close to like the short-term low that got ran because this wick is decently sized. Because I want to make sure at like a bare minimum that my risk to reward metric is like relative to the external high draw. So I could have done like a 1 to 2 just like this. If I got it on the inverse fair value gap, that would pretty much cover like consequent encroachment of the wick. And no, I would not drop to the M1 from like refining it even more from the M5. I never, ever do that. But also like that doesn't match my personality because I don't like trading that such a high frequency. I like trading 5-minute to 15-minute and above. That's it. I can't be bothered by watching extremely lower time frames. I don't know how people trade the 15-second or the 30-second. I would literally be bald. But you would have gotten in on the inverse fair value gap if we didn't close above. But since we closed above the down close candle that ran a short-term low here, you get in there. And I believe I put my stop loss like this, which just relatively had a 1 to 2 risk to reward reliant on the external high here. So the next 5-minute candle actually comes down into that inverse fair value gap. So you would have been here if you got the limits in there, or you would have been in here at the order block just like this. And there's no potential breaker entry. This was just either an inverse fair value gap or a order block entry. And price smooth runs to TP in 5, 10, 15, 20, 25 minutes. So again, like I said before, all you need to do is focus on what is happening inside of the key level and what time is price creating a manipulation at the key level. Like the 9:30 and the 8:30 time will be very, very crucial for you guys to be paying attention to. Never execute before 8:30 and only execute before 9:30 if 8:30 did not provide a manipulation. That is very, very important. And I tell this to everyone, all my mentorship students and all of everyone in my premium. All that sort of stuff is super crucial when it looks to framing high probability setups because price will always turn at a certain time of the day at a certain key level. So once we get that manipulation, all you're doing is waiting to see if the reaction and the low that is set in or the high that is set in is valid. So price turns lower, creates the SMT at a key time 9:30, and then price flips. Creates and violates bearish PD raise, closing above this inverse fair value gap, closing above the down close candle that ran the short-term low, tags the inverse fair value gap, tags the order block, and then price runs. That's it. That is simply it. And when you're looking to frame these trades, like for me, when I'm taking trades on the M5 or the M15, I'm capturing and trying to take the entire move of the body for the daily candle. That's what you do for an intraday trader, not scalping. Scalpers would refine this lower, and I can't do that, and I won't do that because I don't want to. No. I'm not even going to explain why. All I need to do is capture that one trade that reaches a daily objective, aka the expansion of the daily candle, and that's it. So I hope this one made sense to you guys as well. You guys following me? Everybody following along? Yes, no. You don't have to be strict with the alignment. Whatever one looks cleaner. Whatever one looks cleaner to you guys. Point of interest, driver time. Yeah, that's literally fucking, that's everything. That's everything. Literally everything. Risk Reaper, that is not what we are going over right now. But I will go over the entry function behind it. Actually, I will go over that no problem, actually. That's good. Because this was also a very good trade. But it was unfortunate because my stop was moved. So let's do that here. So this was a trade from Wednesday. And Wednesday had no high impact news. Let's freeze that off. And let's go here. Look at pound with everything else. So we had a daily bullish fair value gap, or we had an hourly bullish fair value gap on euro here. And this created a lower low inside that hourly gap, while the dollar index created a lower high, failing to tag that hourly gap. So that was an SMT with the dollar index in itself, but we also had an SMT set in here with the pound. If I look at the pound, creating a higher low, while euro created a lower low, just like this, inside of an hourly bullish fair value gap, just like that. Now, the frame behind this trade was super unfortunate, because if I had my initial stop loss, everything would have been A-okay. So the indicator plotted the down close candle down here with the order block execution. Oh, shit. Go back. I need to delete that. There we go. So the indicator plotted the down close candle here. We closed above it. Execute off of the order block. Stop loss at the low. Cleared and rinsed all 1 to 2, 1 to 3, 1 to 1. Everything. So this would have been the aggressive entry for the first position that you could have put on. Now, I executed when price inversed this M5 bearish gap because I wanted to wait for more confirmation. So my execution was up here when we inversed this gap because I didn't want price to leave without me. So I got in literally like right there with my stop loss at the low, and I wanted to target 1 to 2 risk to reward up here. Just like that. So this would have been an example of you pretty much waiting for more confirmation for the execution, because we had the first order block set in just like this. Once we got that order block, price bounced and ripped higher. But I wanted to put on full size on this position, so I wanted more confirmation. So I wanted to see if price would inverse and invalidate this first bearish PD array. And as you can see, we did. Now price from this point on pushed higher and started expanding. But there was this high here that when we ran it, this was my point of going break even, pretty much. And on top of this, at this point, see how we closed above this up close candle here? Let's say you missed the inverse fair value gap, or you missed buying here. You could have bought in, let's say this is a point where I wouldn't use the entire wick of this for being a breaker. I would have just been in at the body like this. So I would have bought here if I missed the inverse fair value gap. So I would have been in there. So that's the breaker entry with the inverse fair value gap entry and the order block entry here. So that's 3 different ways you would be able to capitalize on euro. Now, at this point, price pushes. We move higher from the breaker. We move higher from the inverse fair value gap, the order block, all this sort of stuff. And then we get a candle, I believe, where was it? Here. This point was when I reduced my risk and went break even. So I literally jammed my stop, went like this, and I'm like, all right, guys, I don't, this is my point. Risk free. I took a partial off at this high, and then I just like walked away from the charts, enjoyed the rest of my lift, and that was it. So if you had your stop loss and didn't just like set and forget it, didn't do anything, didn't reduce your risk, or maybe reduced it a little lower, covering the inverse fair value gap, what happened here was price flipped, because if you look at the dollar index had some sort of retracement, and we pierced the low here. But what happened when we pierced this low? We created another set of SMT with the pound here. Just like that. While at the same time, right after this happened, like minutes after it happened, the US and EU announced a tariff deal. So I legitimately got stopped out right before a trade deal was confirmed. But what is also being respected? The breaker is still being respected. The inverse fair value gap being respected. The order block being respected. Everything, all 3 entry functions were all still good. I was just an idiot and moved my stop and jammed it after I took a partial and we ran this high. So that's an unfortunate series of events. And it is what it is. But shit like that will happen, and you just don't want to tilt and crash out from that sort of stuff. But it happens to everybody. Everybody has stories like this. It's just the fact that the funny thing with this story was the fact that we literally had a US and Euro trade deal confirmed when price took me out. Like, they couldn't have announced it at fucking 11:20. They had to announce it at 11:50. So it is what it is sometimes. But this is just a good example as to the entry functions. All 3 still worked, and the bias was correct, running from an hourly to an M5 hourly external high up here. And then this is also, the external high is all the way above, but this was very nice. We cleaned it all. So the bias, the draw, everything was perfect. Perfect. Another clean example of the 3 different uses of entry functions. I could show one more example here that was very, very clean. That shows the inverse fair value gap and the order block as well, because they always pair super, super nice. This was June 18th. June 18th. Right here. Right there you go. And this was an hourly. And go right there. And again, we're going to focus on the time. The time will be very, very important here. All right. So at this time, 9 o'clock candle, we did not have any high impact news. We just had equities open. In this 9 o'clock candle, we have equities open, so we're reliant on 9:30. Inside of this hourly candle, what do? We created an SMT just like this, with the Dow Jones making a higher low, the NASDAQ making a lower low. And we also did it within a new week opening gap, or a new day opening gap like this. So we basically had a B rated entry function, because this is labeled as an external range low run. So we had an SMT set inside of a new day opening gap and an external low that created an SMT. Now go back in time. Focus on the key times of when price is doing certain things. Now, this big down close candle here is equities open. What did I tell you guys already about equities open? If there's no 8:30 news, you're focusing on 9:30. 9:30 comes in and destructs lower and rips early longs. This is why you wait for these key times to happen. When these key times happen, you need to see what is going on next. What can I anticipate next? This candle sweeps out everything, clears out these lows, all this low. Now I'm waiting. I'm waiting to see how is price going to react from this point on. And if price is going to either continue lower or are we going to continue higher. So we create the SMT there. Next 5-minute candle gets a nice little push. We create a bearish fair value gap right here. So let's say if price inverses this gap here, that's your first means of execution, your first way of getting into a trade. Next 5-minute candle does what? It closes above this down close candle that ran the short-term low, but also inverses a M5 bearish fair value gap. So this would be your execution. But if we didn't get the confirmation here, you would have been able to buy if we just slightly closed above the gap, but we missed the closure here. So you still would be able to get into the trade. So this would have been what you would be looking to take right here. Just like this. Stop loss. My stop loss at this time, I believe it was like right here. And then my TP was a 1 to 2 up here. And then you can see the next 5-minute candle doesn't tag me in yet. Doesn't tag me in yet. Tags me in there. And let's say you didn't catch that exact move. If you didn't catch this tag of the order block, or you didn't catch this tag of the inverse fair value gap, you could have bought the breaker. Where's the breaker? The last up close candle before the manipulation leg here. You could have bought this being a bullish breaker block right there. So if you didn't catch this, your execution or your limits could be there. And then the next 5-minute candle would have tagged you in there, and then price would have expanded and ran higher, just like that. So all three being ways to get into trades. All three. Inverse fair value gap, bullish order block, bullish breaker block. There's 3 ways to get into this. You don't need one way of getting into any trade. You can have multiple different entry functions of how to capitalize in the market for intraday moves. Your just big focus is to know is if this is valid or not. Is price reversing from here or is it continuing lower? And you don't know that until you get either this, or that. You need one of those 3, and if you get that, you're good to go. And the best scenario for you guys is when we get a fair value gap like this, we get that first violation, and then when we close that off, that's my depiction of price being ready to go. That's my view. Now, I think I gave a lot of good examples here, and I think that this was very valuable and educational for you guys. For people that didn't really know this sort of stuff, was this something new that you learned, or like is this just like repeatable stuff that you've already like kind of understood and grasped? Let me know. Good. Even if it is stuff that you guys already knew, it's always nice to see it multiple times. Like, it's really nice to see it multiple times because all you're doing at that point is you're just building reps, and like you're seeing it over and over and over again till like the point where it's the only thing that you see. Refreshing memory is right. So if there's no news before 9:30, you wait for 9:30 to provide the manipulation and create the SMT, which is what I've shown you on every single example pretty much. 8:30, if there's high impact news, wait for 8:30 to provide the manipulation. If there's no high impact news at 8:30, then wait for 9:30 to come in and do its damage, and then wait for the reaction after that. What is happening at those key times? Is 8:30 manipulating into a key level, or is 9:30 manipulating into a key level? Is it creating an SMT? If it is, you can understand and know that price could reverse from that point. And then if we provide any of the 3 entry functions, that's your way of getting in and buying in the opposing direction of where the manipulation was. That's it. You don't. That's why I said, if there's no 8:30 news, you can wait for 9:30 to come in, do its damage, and then you'll know where the protected low or the protected high is for the day. My flaws, I haven't built in reps. You have to see it. You have to see it 100 times, 500 times, 1,000 times until it's literally embedded into your brain, and then you'll be ready to go. Your key is literally just to show up every single day. Show up every single day, watch price, watch what it does at certain times, journal the times of when it's doing its things, journal your emotions, everything. If 9:30 didn't do anything, or if 9:30 was dull and it acted like it was nothing, then 10 o'clock would be the next way of execution. And look at what happened at the 10 o'clock. 10 o'clock, after we confirmed 9 o'clock creating that low, 10 o'clock was literally just the continuation. It created an open, low, high close. 10 o'clock being the continuation entry. 10 o'clock here. 10:05, you could have bought the breaker. Boom, you're in. And this session is all recorded. Everything, this whole thing was recorded from beginning to end. That will be a future YouTube video for sure. But I think I'm going to cut off the class here. I'm really happy that I did this, and I believe we're going to do another educational class in the future next week, and then I'll do another one the following week because I believe Nick is going to be doing one. and we will go over something from you guys, whatever you want to see from another topic. But let me know. I hope you guys learned something in this educational video or this class. And if you didn't, then I hope that this is just like, again, a refreshing, like, or a refreshing thing to see the setup occur multiple times. Psychology rant. What do you got? Well, I need a question. I need a send off question. No, I'm not looking at NQ. I'm not looking at NQ today. I'm gonna get AIDS. I keep trying to hold my trades all the way through, but keep cutting. So I hope that's a joke about the 7 hour candle, whatever that is. I hope that's a joke. So, in regards to holding your trades and letting your trades run, whenever you get into a trade, do you have a plan prior? I'm going to get in here, I'm going to have my stop loss here, and I'm expecting price to go here. If you have a problem with cutting trades early, you need to get into the trade and you need to get off of the charts. You need to accept the risk and walk away, because that was one of my biggest struggles in the beginning. And like, I was just stuck and glued to the charts, just watching every single candle print. And I was losing my mind because, like, if I had one pullback, like, let's say price, I'm watching it from this 5 minute perspective, and like I see price do this, create like this like needle wick sweeping out a high, and then the next candle like trading like this or whatever it is, nothing like kind of displaces after my execution. I'm getting scared. Like, I'm literally automatically being like, okay, was price just creating a liquidity sweep? We have SMT at these highs now. Price could flip bearish. We're still inside of this 5 minute bearish gap. Like, I don't know, like all this sort of stuff. Like, you're second guessing your analysis that was already framed from a daily to or from a hourly to an M5 perspective. So like, you need to trust your analysis more. You need to accept the risk and walk away. And that's literally you going to be what will push you to the next steps. Before you execute, or when you execute a trade, you should already know and be completely fine and comfortable if it's a loss. If you're freaking out and complaining, if like price stops you out and it's going to hurt you, you either one, have risked too much, or two, you're just not in a comfortable financial state for you to be like playing with any like live money or whatever funded account you're touching around with. So you need to reduce your risk. You need to accept the trade as a loss the second that you go in, and walk away from the charts. Don't watch every single candle that prints, because you're going to lose your fucking mind. You need to just fucking execute and walk away, which is what I do a majority of the time. Like, let's say if I'm getting into a trade later on in the day and like it's from an M5 or an M15 perspective, I'm going to execute, and if it's like floating in profit, or if it's floating at a certain point, I'm going to say, all right guys, I'm getting off for the day, I'm going to the gym, and I'm setting and forgetting the position. I literally leave my charts with my position floating, and I go to the gym and I occupy my time in another way. That is what you need to do. You can't be glued to the screen. You can't be looking at the charts and looking at your P&L, because you're going to be freaking out. You're going to be second guessing the position, especially if you get one red candle or one pullback. You need to accept where you put your stop loss and know where you had the plan set in originally before you got in. I think that the set and forget method is extremely powerful, and it helped me a lot in the beginning of my trading. That's like very, very big. Very big. 10 o'clock will be your next entry. Whew. But yeah, indices were a mess today, guys. An absolute mess. An absolute mess. But yeah, definitely give it a shot. It should help you a lot. And then just more so about trusting your analysis, trusting your stop loss, accepting the risk, and walking away. But now that will be my cap off. And I will do another announcement on when the next class will be. I believe Nick is going to do the next class, and I'm going to do the next class after that. This entire video and everything will be uploaded on YouTube tomorrow, if not Saturday. So look out for that. And thank you guys just again for joining. And I really hope you learned a lot today.